Yo, what's up everyone? My name is Andrew Warren, and in today's video, this is going to be all about S&P 500 inclusion for Tesla stock. And we discussed this topic and specifically this article a little bit on Friday, but I wanted to do a deep dive straight into this discussion because I found an article by CNBC that actually has some interesting insight on the possibilities that we could be seeing between now and S&P 500 inclusion, and especially more specifically on the Friday before that Monday, which is S&P 500 inclusion. As some of you out there already know, Friday is quadruple witching. That is the third Friday of December, and it's when a lot of options expire. So with that in itself, people are already speculating and expecting some major movements or just a lot of volatility. But this article that we're going to be discussing today goes a little bit more in depth on, even just aside from quadruple witching, but discussing the index fund trackers and the fund managers that are not necessarily the S&P 500 itself that has to make the purchase, but their goal is to have their funds that replicate the S&P 500, either getting the exact performance as S&P 500 funds or outperforming it. The most ideal scenario for them would be to outperform it, or at least at the minimum perform the same as the S&P 500. But this article is all about some of the buying expectations of these major fund managers, and that in itself has been what a lot of people have been speculating around Tesla stock, because not only is S&P 500 inclusion important in itself because that's a mandatory large purchase that is being made, but of course there's also retail investors that are piling on top of all of this. There's short-term traders as well, which are not going to be holding the stock long-term, and then we have these index fund trackers, which will likely be making some purchases, and some large ones at that. However, at the end of the day, they do have the choice to not make the purchase or to make the purchase. It's just simply their decision, but in my opinion, they would be pretty crazy not to make the purchase, even if they have to pay a premium at this point in time in the long term. I think that this stock is a solid buy for people like myself that are planning to hold this for 10 plus years, but that takes a lot of dedication and persistence because this is a volatile stock and some people don't have a very high risk tolerance. But as I stated, I sort of referenced this article a little bit yesterday, but I want to dive right into this one. So as always, of course, if you enjoy the Tesla videos, please make sure to smash that like button. And just checking out Tesla's performance for Friday before we get into this article, we currently have a share price of $607.54, and in the normal market hours Friday, we had a minus 2.72% loss. That is minus $17.08 from the share price. And then in the after hours, we are currently at minus 0.40%, which is minus $2.45 from the share price. So with that being said, let's get right into this article. As you can see, this is by CNBC and author Patty Dahm. So as always, we appreciate this information. And the article is titled "Volatile Tesla's Entry into the S&P 500 May Not Be a Quiet Ride for the Stock Market." And beginning with some of the key points of this article, it states Tesla's entry into the S&P 500 could be anything but a quiet ride, and it is likely to put downward pressure on other stocks in the index temporarily. Already, investors are gaming how its entry could impact the S&P 500, adding volatility and forcing the sale of other names in the index as investors and funds that have to own the full index make room for Tesla. And before we go any further, this is a good point because not only is it going to be really interesting to see what happens with Tesla stock specifically, but I'm actually really interested to see what happens with the rest of the stock market, and more specifically the rest of the stocks in the S&P 500 as more purchases are made with Tesla stock. Because as it states right here, a lot of funds are going to have to be loaded off and sold just to fund this Tesla purchase by the S&P 500 and institutional investors as well. So there's going to be a little bit of a readjustment in these large portfolios where we're likely going to see some other stocks being sold off and possibly some other stocks being a little bit into the red on the same day that this big Tesla purchase is made. And then at this point, it breaks a little bit of the holdings down, in which it states the volatile stock has an unusually large market cap for a new member of the index, about $465 billion as of Wednesday, when not including founder Elon Musk's 20% stake. With 17% of the value of the S&P in the hands of index investors, that means $80 billion worth of Tesla will have to be bought. And that is according to the S&P 500 Dow Jones Indices senior index analyst Howard Silverblatt. Then it includes the quote, "Because the market cap is so enormous and the amount of dollars that are going to be needed to buy for the index people is so large, there's a lot of stock for sale in the other 499 names of the S&P, said Peter Bukvar, chief investment strategist at Bleakley Advisory Group. And then it continues a little bit to talk about the stocks potentially being removed and the one that Tesla is going to replace, which that's already been announced. But then it states Tesla joins the S&P at next Friday's closing price, a day expected to be volatile already because it's also the quadruple witching quarterly options expiration. Quote, "The 18th is when all the action happens," said Silverblatt, but he noted investors other than the indexers could be adding Tesla before that and trading the other names in the index. And that's that's really important to take note of as well. This person is saying that the 18th is when we're going to see a lot of the action, and that actually seems like a pretty valid statement considering that's as close to S&P 500 inclusion as it gets, since that's occurring on the 21st. And this article will continue to explain why the 18th is so relevant, but also another thing to take note of that it adds in here as well is that a lot of retail investors will be adding also. So with this taken into consideration, we've already seen a big run up from some retail investors purchasing and some institutional investors purchasing as well. But as we know, when it comes to Tesla stock, the retail investors really love this one, and rightfully so in my opinion. But it's certainly a stock that a lot of retail investors are attracted to, and that's something to take note of, because if there's a ton of retail investors buying this stock over the week leading up to Friday and Monday, then we can actually see a pretty notable run up. But just continuing with this, it states the addition of Tesla will cause the largest rebalancing ever of the S&P 500. Silverblatt said Tesla could create more trading than many other names added to the index, just simply because it has not been in the S&P 1500 as a member of the S&P 400 mid-cap or S&P 600 small-cap indices. Often, companies leaving the S&P 500 will join the S&P 400 mid-cap index, and many times companies graduate from the mid-cap index to the S&P 500 as they grow, Silverblatt said. Quote, when a company comes that's not in the 1500, it gets a bigger hit. More institutions have to buy them. They are in the index for all US stocks, but they are not in the S&P small cap or mid cap usually, said Silverblatt. Continuing with this, it states Silverblatt said Tesla could be similar to the experience with Yahoo when it was added. It was not a member of an S&P small or mid cap index, and there was a lot of buying interest by institutions. Yahoo stock rose 50% between the announcement and its entry into the index. And this is something to take note of as well, because I recently saw a chart on Reddit that was showing the Yahoo S&P 500 inclusion, and even on the days after inclusion for Yahoo, there was actually a run up with the stock price, and it continued to go upwards a little bit, and there were some dips here and there, but I saw in the short term at least, that's what the chart was all about. The days afterwards, the stock continued to run up a little bit. Now, I think things could be a little bit different for Tesla stock. I am expecting a sell-off somewhere after inclusion. I don't know how much this sell-off could be, if it's going to be a huge sell-off, or if it's going to be very minimal or none at all. We really don't know. Only time will tell with this, but just to keep my expectations low, I am expecting a sell-off, just because that's not a very uncommon occurrence when it comes to major events with Tesla stock. But then again, with the events in the past, it hasn't been an event where a mandatory large purchase is being made. So this is really just one of those case scenarios where we don't know what to expect, because nothing like this has ever happened before. But I'm basically just saying, with the Yahoo chart that I saw, in the short term, the stock rose up until December 31st, I believe, and then after that there was a little bit of a dip, and then the chart ended there. But this article continued stating fund managers that must buy the index will try to buy Tesla as near the December 18th closing price as possible. Quote, it's probably going to be one of the biggest market on-close buy orders of all time, said Brookvar. And this is really one of the biggest key points of this article that is kind of the takeaway point. As this person states, a lot of fund managers and a lot of index trackers are going to try to get as close to that price that the S&P 500 will be paying, and that's really something important to take note of. That's what I was mentioning in yesterday's video, and this kind of makes sense when we think about it, because a lot of these fund managers, they don't want to take the risk of potentially buying the stock at a higher price and buying, let's say, on Monday or Tuesday or Wednesday or even Thursday, because there could be a big price difference between those dates and when the S&P 500 makes that purchase. So that's something to especially take note of, because to reduce this uncertainty, at least when I think about the risk tolerance of some of these index fund trackers, a lot of them are likely going to try to make the safe move, which is to buy near that Monday date, or buy as close as possible to Monday of the inclusion. And with that in consideration, it would make sense to see a lot of them buying on Friday, just because it's so close to that date. And from their perspective, it would be that the share price is as close to it gets as the Monday date, which is when the S&P 500 is making the purchase. So this does actually make sense when we think about it, and when we think about how these fund managers are trying to reduce uncertainty and the difference between when they're buying in and when the S&P 500 is buying in, because we have to consider that they need to at least perform at the same level as the S&P 500 or do even better than that, and that is their goal. So it makes sense that we could see some volatility on Friday, or simply just some notable movements, whether that's up or down. But keep in mind as well, with this article, there's going to be some short-term traders seeing this as well that are likely going to be offloading some shares on Friday to provide to these fund managers to buy them, because the short-term people know that this might be a good chance to sell their shares off before waiting until Monday when another big purchase is making. And a lot of short-term traders may be doing this because they know this purchase is inevitable on Monday, and that a lot of these index fund managers are going to be doing this. And some of the short-term traders might even be trying to sell sell on Thursday or Friday to just sell a little bit earlier to try to outsmart some of the other short-term traders out there. And that's where it gets really into this whole uncertain future, because there's so many different people trying to outsmart each other, and that just plays a role in a lot of the uncertainty that we see in the stock market, because it's really just a lot of human psychology and people trying to outsmart each other when it comes to the short-term movements. This article then continues with a quote, "I think the weighting is going to be 1.5% at the current market cap. The name it is replacing, you assume, has a lower allocation. Therefore, Tesla has to take from the other 499 a little piece from each," Brookvar said. "Tesla is big, but it is small compared to Apple, which is 6.4% of the S&P's value, or Microsoft at 5.3%. And then another key point of this article states, typically the market cap of the company coming in isn't even close to this. Usually it's a few billion market cap. It's rare to see a 9-figure market cap company coming into the S&P. Usually it's already in the S&P at a smaller market cap. This has potential of being much more volatile," said Brookvar. The article continues with some insight from Paul Hickey, who is co-founder of Bespoke. Said he expects to see some selling pressure on the other S&P names temporarily ahead of Tesla's entry. As for the stock that will leave the S&P to make room for Tesla, he said the exiting companies have had mixed performances, but noted that of the 15 stocks that joined the S&P 500 so far this year, most of them have outperformed the S&P since their inclusion. So that's basically the end of the article right there, but the huge takeaway from this article is that there are some expectations towards Friday, December 18th being the notable date of S&P 500 inclusion, aside from the inclusion date itself. And that's because we have a lot of these fund managers who are going to be making the purchase as close to inclusion as possible. And with that, there's going to be some short-term traders making moves based on those expectations. And that's where it could just really throw a lot of volatility into the market, or we could see a major movement upwards or a major movement downwards. We really have no idea. The market is so unpredictable, it could go any way possible. And I think that's why investors are so excited and are just speculating all over the place when it comes to the movement of Tesla stock over this week, on Friday, on inclusion, and afterwards. And another takeaway from this as well is that some stocks are going to have to be sold, even some companies within the S&P 500, to make room. And I think a lot of people are interested to see what happens with the rest of these stocks like we have on the list right here. And like I said, it's not only going to be an interesting event where it's just all about Tesla stock itself, which I think a lot of us, that's what we're really looking at, but even on the side, it's going to be interesting to see what happens with the rest of the stocks in the market on that day as people try to free up some funding to purchase Tesla stock. And this goes all the way back to what I said around 3 weeks ago. I said the month leading up to S&P 500 inclusion could possibly be one of the craziest months ever in Tesla stock history. And so far, this seems like it's come true just because of this really notable run-up that we saw a few weeks ago compared to right now. If we take a look at Tesla stock over the past month, it is currently up 46.65%. So that is really tremendous. And I'm just really interested to see what happens with this stock between now and inclusion, and especially on this Friday with quadruple witching and with a lot of investors making big purchases before the market closed. With this video, I just wanted to share some of the insights of this article with you all because I think it had some good points on the discussion of Friday being a big day for Tesla stock in terms of a lot of these fund managers and index trackers making purchases. And then it also kind of discussed the retail movements that we may see between now and inclusion as well over this week, where I think a lot of retail investors could be piling on this stock because they're expecting these big purchases being made. Even with the S&P 500, that's a mandatory purchase in itself. So this time around, it's not only just a popular notable Tesla event like in the past where we've had the stock split or battery day. We have all of those characteristics in terms of just hype and speculation about the stock and a lot of people buying in, but we also have the mandatory purchase, which is S&P 500 inclusion in itself. So this time around, it's guaranteed that the stock is going to be purchased. It's just a matter of how everyone else reacts to that and whether they try to short-term trade it or anything like that. But anyways, please make sure to smash that like button if you all enjoyed this video, and also feel free to check out Robinhood and Webull in the description below. With Robinhood, you'll get a free stock if you sign up with my referral link, and you can get 4 free stocks in total with Webull, 2 valued up to $250 for just signing up with my referral link, and then another 2 valued up to $1,600 for depositing $100 into your Webull account. And you should be able to take that $100 right back out after you get your free stocks. That's what I did, and it worked for me, and it also helps support the channel when you all use my referral links, which I really appreciate. But I hope you all enjoyed this video, and I hope you have a fantastic rest of your weekend.